Hey, everybody, welcome to the Saturday morning call. Thank you so much for joining us. We're excited to have you here. We're going to talk a lot about nSights today. We're super excited for some of the trades that have gone through. We were just talking about closing out lots and lots of trades for those of you who still had near grids from back in February. And Doug, you then started to talk about strategies with cost average. And sometimes you shouldn't get yourself over
You
leveraged.
can't, right? You just don't have enough money, right?
Yeah.
So, if you're trading coins, basically what I was going to say, if you're trading coins that you believe in, then you can take the ride. Or if you're over trading, you got some coins that you're already cost averaged in, and those close out, and the coin that you didn't cost average is still deep in the market, then you can go over and cost average that one, right? You always have the options, especially with nSights, because of the way that we set up auto cost averaging and manual cost averaging. So hard to lose. That's the key. So, anyways, we're going to have a great day today. I don't know if we have any new people on this morning. Welcome to the call. We usually kind of have a fun Saturday together. We do a lot of teaching. Today, I'm gonna do a little bit of teaching kind of towards the end. And this week, guys, we're gonna have opportunities. Um, Lots of things are going on with Utherverse. I'm going to digress just a little bit. A lot of things are going on with Utherverse. We just signed a contract with the #1 skateboarder guy. I think it's Nigel Houston. Just signed his contract this week to put his skate park inside Utherverse. And there's a lot of other things going. And with that being said, because there's some things that happened over in Dubai this week for Utherverse that are very, very big. But I told Peter that I want Brian Schuster, the founder of Utherverse, to come on this week with us. So one night this week, I don't know whether it'll be Tuesday night or Wednesday night or whatever, but be listening to Discord and bring everybody that you know that are into investments, because this isn't trading like you and I trade. This is going to be them being able to own stock in probably the one of the top metaverse companies. In fact, they own all the patents in the metaverse. Basically, you can't even have eye movement in the metaverse without breaking their patent. And just the way that the bands do concerts and and stuff, and everybody saw that Kiss is going to have their metaverse. So I think the stock in Utherverse is a very, very big deal. So anyways, if you want to bless people in your lives, whatever night we have that this week, Brian Schuster will be on with us, just us. And we will be able to talk, he'll talk us through what he's doing and show us some cool new stuff. And I guarantee you it'll be an exciting time. So be prepared for that this week. Hopefully that is exciting to you as it is to me. But what I do know is exciting to you is what we're going to look at next. And then we're going to get into the training for today, and I'll help you guys out on a couple of thoughts here. So this is what Deb was excited about today, right? I blurred out everybody's names, but you can see the net profit returns. You can see already today the number of trades that we've closed today for everybody. And this is just the 9th. This is just this morning, right? Just today. And then I looked down and I started looking at the 8th, right? Yesterday, what we were doing. And again, you can see the percent returns. And this one, I don't know. I got to dig into this one. I'm not sure what happened there. We should never have a negative close unless somebody closes it negative themselves, and that's possible. So, but we're looking at that, and I said, okay, well, how far down the sheet do we go? Well, that is the first sheet, and here's the second sheet. This is all the 8th, guys. Look at this. All the 8th, all the returns for everybody, all the 8th. Okay. And here's the another sheet of the 8th. Okay, all the returns. Here's another sheet. Okay, I missed one. Did I get this? I may have got this one. I was going pretty fast. And here's another sheet of the 8th. And I didn't even go, oh, it starts getting into the 7th here. I didn't even go to the next 2 or 3 pages to see what we did on the 7th. But guys, we're killing the market. Absolutely killing the market, both in nSights and Digi. And I didn't pull up Digi's results, but Digi is killing the market also. So let's dive into the lesson here. And I want to give you guys a little strategy because we're in this up pressure and this uptrend. And so I want you guys to be thinking things through as you start grids and stop grids, right? And maybe pausing grids for a while and turning other grids on, you know, and as you work through your trade models. So let me stop sharing here for a second and let me end this show.
Real quick, since you mentioned Digibot, I wanted to let you know that Ivan said he had a ledger close out from 2021 in
Wow.
the last day or so. So
Yeah. Yeah. And maybe you know, next time we'll spend well, I think Wednesday we might be with Brian Schuster. But you know, let me think about that, because one of the things I did with Deb and the team this week, and one of the things I think Deb may have shown on last call she did, is even though you've had a ledger from 2021 running, all of that time you've been making money in that ledger. So
and
it's not that,
compounding
huh?
and compounding.
And compounding, right. And it's not that the ledger, and I had to look over here because you're over on this screen now. I got my charts over here. So everybody's, why is he looking over there? You know, so
I'm sitting beside you now.
right, right. So you get this side now. Yeah, but the the system is making money all the time. What that means is that a trade from 2021 or a ledger from 2021 just closed out 100%. It means it took trades that were initially 80% negative, some as much as 80+% negative, and then some a lot, you know, less, but those were kind of the extremes. And where people would have taken massive losses if they were trading on their own, the ledger kept trading that account, adding trades, closing trades, adding trades, closing trades, and ended up trading, in some cases, hundreds of trades since 2021 to now, closing them all in profit, right? And then closing the overall ledger that maybe it started off as a $50 trade. Now, over that period of time, it traded $1,000 or $2,000, but it closed $2,000 of trades in 3 to 5% profit. And so, and never had to get back up to that 80% negative number. It did the advanced dollar cost averaging to close all of those numbers into profit. And that's Digi. We'll go into that more in detail maybe next time. But let's look at nSights, and I'm sharing nSights now, aren't I?
Nope, you
Nope.
are not sharing.
All right. All right.
We see it now.
Okay. So let's somebody give me a coin to look at. I have Shiba up here. Let's get a different coin. Somebody have a coin. See, here's the problem. The coin has to be in my mid wallet. Okay. If you guys see a coin you want to look at, maybe DOT. What about DOT, Deb? Any, or Alpaca?
How about VeChain? That
Did you see this
yeah,
one?
right there. Yeah, I
Okay.
haven't looked at this coin in a long time. It used to be my favorite.
Okay. Are you setting me up for something here? Huh?
No, I actually just I've been wanting to go do some research on it and I haven't. So why not
Wow.
use Doug? Why
Wow.
not get the
Wow.
real deal?
Look at that thing, man. Ah. Okay. Here's the lesson for today, guys. And it's a and if you're new, you know, there's lots of classes on how to set up grids and pullback grids and the standard or dynamic grid and stuff. So I'm not going to teach that today, but we have lots of training in our YouTube back office for members so that you guys can watch and learn just about everything. So when I'm setting up a grid, I can't just set up a grid, whether it's a dynamic grid or a pullback grid. I can't just set up a grid without looking at the market. Okay. I think it's important to look at the market, because if you don't look at the market, especially in a strong up run, now in a down run, a pullback grid will always take the trade usually because the market's going down. But in a strong up run, the pullback grid has to be used correctly. And what do I mean by correctly? When I look at the market, and for you guys that are into trading, these are Heikin-Ashi candles. I use these so it kind of smooths out the market for everybody, and they can kind of not see the choppiness in the market. So if you're a trader, you probably recognize these candles as Heikin-Ashis, and that's exactly what they are. But if I'm setting up a grid, and let me get a couple of tools out here before I expand it. And let's do a horizontal. And let's get
that's smart, Doug.
Vertical.
Get the tools there before you start. That's brilliant.
I get lucky every now and then, Deb.
That's really, I mean, this training that's all I needed.
Right there.
There.
It's done. Okay. Let's say from the right of this vertical line here, and I'll make it a nice thick black line here. Okay. The right of this line doesn't exist, okay? I'm right here at this green candle, and I want to set up a trade, okay? Because I just completed this up move, and again, these are Heikin-Ashi candles, from the wick low to the current high, I'm up about 7%, and I can look back that a number of the runs are about 7%. This one here is about 5%. And I look back and I see that 5% is an important number. Come on, let me grab you. This one here is about 4.3%, but I've started this up pressure. So the runs are getting a little extended, right? This one here is about 8%, 9%. Okay, so I got a good feel. 5 to 8%. Usually I get a pullback, okay? So if I am looking at this high, I don't know if it's the high or not, guys. No, well, maybe we'll be able to predict that with the,
yeah, right?
I say nobody knows, but yeah, maybe I'm wrong about that. We'll see how far down we can dial the time frames. But anyways, but I got to know that I'm within a range here of getting a pullback, right? And the other thing that I need to know is what is the current pullback range? Well, not even 3%. Okay, from the high, which high to low, right, which is hard to get, is exactly 3.65%. Okay, and I need to know these things, right? Almost 3%, right? So I'm not getting really deep pullbacks, which tells me that I'm in a tremendous amount of up pressure. So one thing that I would want to do at this point, because I know that a pullback is probably going to come, which it did, but we don't know that, right? We don't know what's right of this line. I know because of past, within this range, human psychology, guys, what I taught AI, okay? Human greed comes in and says, I need to take some profit. And we can see the ranges that it's taking the core group of people that we're trading with. We can see the ranges that they're taking profit at. Okay. Now, does it mean that it's going to continue to go up? At this point, we don't know that either. And so, having a trading plan and understanding where you're going to take profit and how you're going to get in, and if you get out in profit, how you're going to get back in, all of those things become really important to be a very successful trader. Okay. But at this point, I know that we're at a high or close to a high. Okay. Simply because of market move. Now, could it blow through this and go on up? 100% absolutely true. Right. But I have to trade based on certain parameters. And those parameters are dictated by prior market movement. Now, even though we say, prior trades or prior history doesn't predict future outcomes, and we have to say that legally, to say that, prior money made doesn't predict future incomes, right? Basically is what the lawyers are making us say. But to say that the prior market doesn't predict future market activity is absolutely wrong, right? It absolutely does because one simple fact, we're humans and we're all trading together and we're all looking and trying to understand what each other's going to do. This is like a giant chess game with millions of people. Okay. But the difference is here, if I'm really good at this, I know where to go get data and analysis that helps me understand what you might do next. Right. And if I can understand what you might do next, it tells me maybe what I should do now. Right. And because of that, if I'm setting up a pullback grid and I know I'm at a high, I would want to know these distances, and I would want to say, okay, my options are aggressive, which is around 3.5%. But remember, it has to hit that number, and there are other algorithms that go in after it hits that number, because the AI part of nSights begins to ask questions. Do I see up volume? Is there up volume at this level? If there's not, then it won't take the trade because it's looking for a specific type of up volume or market intention to go ahead and execute that trade that you said you wanted to do around 3.5%. If it sees that up volume like here, and if this up, which one of these qualify, I don't know without going through the numbers, but one of these would qualify. If this up volume is too close to the prior high, because we know highs get retested and rejected, it may not take that trade. So how do I handle that as a trader? Because I want to be in these trades. I want to be in this up move, right? Well, I have two options. I have the option of setting a custom range, or I have an option of getting in at market now. Now, I would not use the getting in at market now because I know I'm very close to a potential pullback because I've already done my analysis on you guys. I know where you guys take profit. I know where you guys stall the market, and I know about how far you're willing to go back down before you're willing to get back in. I know all those things, right? So I'm within that. So I'm not going to use, I can't see to the right. I'm not going to get in at market at the top of this candle. Okay. But I don't want to use 3.5% either. So my option is to set a custom range and maybe set that at 2% or 1.5% or some number that allows me to get a slightly better trade, so that if I do get a good entry, let's say I do a 2 3/4 or something, I get in down here. Now when it comes to the next high, which we don't know, maybe 5% is my target profit. I can get out in profit and do it all over again, right? Where if I had set it at a market at the high, I'm only 2.72% in profit. The little nuances of this make it really important because it increases the number of turn cycles that we get in our trades. So the more accurate I am and the quicker I can get out, the faster I cash out that money is important, but it's not the only important thing. It's that I cashed out that money and I can use it again as a turn. So to talk about increasing your ROI, then you understand that I can now turn that same money again and make money on that same money over and over and over again, right? So if I did this correct, I got a better entry. But now let's say I came to the market and I looked at it and I don't see anything right of this green candle. Well, I have to ask myself the question. This is my last high, and I got to know what my last high is. From right here, I've already pulled back 2.2%. And these are all 1.5%, 2% pullbacks. I'm at that number. What should I do? Get in now, right? Maybe use the market order. Use get in now potentially versus a pullback. Because if I set up a pullback from here, okay, I set up a 2% pullback from here, I'm going to miss the trade. So I just missed another maybe close to 5% move in the market, right? Right there. And again, I would look at this and I do the same thing. Over and over again, I could be in and out of this market within hours making profit. Look at this one. If I'm here, no. Pull back here, yes. And I keep doing that. So setting up your grids. Now I've taught number of ways to set it up. Standard pullback grid with number of pullbacks. I gave you a very custom grid last time to use, and that would be the grid that I would use here, where I set one pullback with 2 or 3 cost averages attached to it. So if I'm wrong and it does go deeper, because I'm in a strong uptrend, if it goes deeper, I can cost average that first entry, make more money in the next push because I've got more money in the game. And the first time that happens, I got to begin to think. Now, here, if I'd done that, I did the single pullback with multiple cost averages. The cost averages never got hit. Probably never got hit here, never got hit here, never got hit here, never got hit here. I'm only getting in my first trade on each one of these. But as soon as the market rolls over and hits that pullbacks, it will almost always, in high probability, it's going to retest the high that came from and maybe a little bit higher. Now I got to start rethinking maybe my strategy. I got to watch what the market does. Do I get continuation? Great, then I'm in the game. I keep going. But does it begin to stall out? Do I get a channel that we may be rolling over coming to the downside? The first time we hit those cost averages is your wake-up call to understand that may be coming, okay? So think about when you're setting things up here, which pullback grid am I going to use? Which grid am I going to use? Pullback or dynamic, or what is standard, but it's really a dynamic grid. Which one am I going to use? And how am I going to set it up to maximize my returns? Now, if you're new to trading, you can just turn it on, set up a pullback grid, and it's going to make you money. I have a number of traders that's where they're at. That's what they understand, and that's what they can do. That's fine. But as you guys learn and grow and get more knowledge, I have to get you thinking about how to maximize your returns, right? And that's what this is about. So if you're at the beginning level, erase it. Well, don't erase it. Just put it back in the memory somewhere, because in a month or two, it'll all start making sense, and you'll be able to bring that forward, and you'll be able to use it in a very powerful way. All of these are building blocks that will help you learn to make more money. So with that, Deb, I'm a couple minutes to 9. I'm going to end there and give it back to you. And I appreciate everybody being here on Saturday. And back to you, Deb.
Excellent, excellent, excellent call. This last piece that you just did for those of us who are trading pullbacks, it's invaluable, right? Because all of us are looking and trying to decide. There's two things. When we're first getting into a grid, like we're looking at a coin that we're not trading yet, we're trying to determine which pullback to use. And now you're saying, you know, potentially if it's already pulled back, you might want to just jump in at market. Like we have so many options and so many strategies. I think that's great. There was one other point that I had and I can't remember what that one was. It might come back. The other thing is ACA. It's important to understand, and Doug honed in on this at the end. Sometimes, a lot of times, your ACA is not going to be hit, right? Because it depends on what percent. In a standard grid, I was using 15% across the board. If it drops 15%, throw another however much at it. In a pullback grid, you taught us last week that we could look at adding our ACA more strategically in smaller moves to in an up market, right? So there's so much. I'm looking at Kenneth's question in here, and really you can turn on and off your ACA on the grid line or on the entire grid. The thing that I love about nSights is that you all have lots of options of which strategy you want to use and when. You can turn off your ACA. The fact is, your question is, if one of your grid lines in particular, the coin moves from negative to positive, is it okay to turn off ACA for that line? Kenneth, what you want to think about is right now, it's positive, right? It's not going to do anything. It's not going to fire your ACA. But if the market drops while you're out having dinner or out on, fishing, like you're out doing something and the market drops, if you have turned off your ACA, you don't have that protection in there to come on and go ahead and take a trade for you. So that's something to think about. Right, Doug? Is that how you would answer that?
Yeah, no, I think you nailed it. And when all you're trying to do, guys, is constantly be balancing where the market is, where you think it's going to go. And again, if we can develop some predictive analysis, that might help you. And that's my goal, right? Is to give you guys those edges and tools that might allow you to make more profit, more percentages, bigger moves, those kind of things. But given that's not here, and given that the market moves, you have the power in your hands to pause things, turn things on, and as I tell people, as long as you don't overtrade, as long as you don't open up too many grids, get too many grid lines going, get over leveraged too quickly, there's almost nothing that the market can do that we cannot trade out of and make money. It's almost impossible for the market to beat us. And we just proved that. We had trades from 2021 close and profit after 2 years of making money all that time, right? So what I believe is, if you don't over leverage and you don't use leverage, you only trade 1-to-1, you own the assets that you're trading, and you listen to the basics here and you grab those, it's really, really hard for this market to beat us. So
yeah, I love it. And going back to what Kenneth said, this was my second piece. Your strategy might change every time you look at that chart, right? You might change your when to take the next trade strategy. But Doug, what never should change, and this took a long time for Doug to beat this into my head, but what never changes is the initial strategy when you walked into that grid, right? How much total money were you planning on trading in total on that grid? That can't change. If you start doing a deb and a matic deb, a matic Monday deb, what happens is
It's a
you
new song.
forget you forget the amount that you were planning to trade, and you're just trying to save yourself, right? And you're adding and you're just going absolutely nuts until you just finally pull a trigger and sell something negative because you just want the pain to stop. Like, I think TMI, guys, there's just a lot of hurt going on with Matic right now. I have one trade left, in that grid. I had 9 total plus 1,000 ACA manual ads and auto ad. Oh my God. I know.
Let's all give Deb a hug. Give her a big hug.
I went through
Group
this with
hug.
Sarah yesterday too on our call. Anyway, you want to have a strategy going in and know and watch what you're doing. Like, you don't want to turn around one day and see that you've got, $3,000 into a grid. And
Yeah. But guys, this is a lesson every trader has to learn.
oh, I told that to
You know,
Sarah yesterday too.
yeah, I was on with a trader, Deb just told on herself. I'm going to tell on myself, okay? I was on with a trader, talking them through, and they were, and I was teaching that depending on when you get involved in trading, really imprints your psychology of how you look at the market, right? If I get involved in trading and the market's down, I'm going to be kind of gun shy, because the market keeps going down, right? And I really have to have those skills to manage those down trades. But if I get involved in a market that's going up, I'm going like, what's the big deal? It's like making money all the time. Woo woo, it's party on, And and you have those two different people, right? But there's an issue with both people. If I'm the guy that learned while the market's going down, I'm often too conservative when the market's going up. If I'm the person that learned when the market's going up, I never get conservative enough when the market goes down. Now, I would rather be the guy that learned while the market's going down, because I know that I can trade all the way up and still make money. Maybe not make as much, but when that market rolls over and starts going down, and it will, guaranteed, it will go down, I won't give all that money back, right? Because I'll have the skill sets that I learned while that market was going down. So when I started trading, and we locked it in, I think yesterday or 2 days ago. It's 20 years ago. I'm not going to say it's any more than 20 years ago, but it's a long time. So we finally locked in that Doug's from now
20
on is
years.
going to say 20 years is the number, right? Guys, I'm getting more gray, guys. Come on, this should be true. I look at all these young kids doing YouTubes, and I go, that used to be me, right? No, that's still me. No, and then I look in the mirror, and it's not me. All right, so what? Okay, so I started trading with a guy that traded on the New York Stock Exchange floor, right? This guy was a pro. He knew what he was doing. But I was new to trading, and obviously he didn't know as much as I did, because I asked him a question. I looked at the charts, and I could see the market went to a low right here, then went to a high right here. And I said, why can't we just get out there and profit, and back in here and out here and profit, and comes down, let's buy back in down here? And I said, I can see the low. Why can't we figure that out? Why can't I get that number? Well, obviously, you see me dealing with AI. I'm still dealing with that issue, right? So still want that number, right? And he just laughed at me, right? Because I was new to trading. It looks so simple and obvious to me, right? 20 years later, not so much, but now you learn that your trading plan is your success, right? And things that allow you to make money, like, when am I going to make profit. I was looking at a wallet and in analyzing some of these predictive bigger moves in new coins. I was looking at a wallet, and I think the guy had, I was looking at multiple wallets. It's either the guy that had 105 million in his wallet or the guy that had 165 million in his wallet. And then I was looking at a guy that had over 500 million in his wallet. But anyways, it was one of those two guys, the 105 or the 165, right? And he had a trade in, and he made $1.5 million on this one trade. Okay. But the market kept going up. At the top of the market, he would have made over probably $7 million had he stayed in. And I asked the person I was talking to, did he do the right thing? I'm going to ask you, did he do the right thing at getting out at $1.5 million, or should it be held on for $7 million? Give me a 1 if he should have held on for $7 million, and a 2 if he should have got out at $1.5 million. I thought I was done teaching for the day. Okay. He did the exact right thing. He got out at $1.5 million because that was his trade plan. Had he not gotten out of that, the market could have come all the way back down to zero and he would have got nothing, right? He doesn't have the predictive analysis that we're building, but it could have come all the way back down to nothing, right? There's other things that he could have done to hedge that, and I don't know if he did, right? I didn't see all his additional trades, and he probably is a good trader. Maybe he hedged it in a certain way that he could have made a lot more money. But based on that one trade, he made $1.5 million and he did the right thing, right? Because you can get out in profit, and like I showed you on the charts, you can always figure out another place to get in. So as long as I'm banking profit, people putting money in their bank account never went bankrupt trading. People not putting their money in their bank account, not taking money out of the market, will end up with zero or less. So he did the right thing. So anyways,
Love
yeah,
that.
we never know. We gotta learn.
Yeah, absolutely.
All right, guys, we're going to call it a day. We went over. Appreciate everybody taking your time with all of this. And give me a 1 in the chat if you enjoyed today. If you didn't, then don't tell me, please.
Oh, I see a couple twos. No, I'm just
Oh,
kidding.
yeah, there you go. Okay, make note of those twos, Deb. Okay.
Oh, it was a
All
great
right.
training. Thank you so much, Doug.
All right. Brendan, hey, good seeing you, brother. Thank you. And Deb, Candace, love you both. Thank you, guys. We'll see you guys next week. Please remember, we're going to bring Brian Schuster on. Bring people to the call, guys, because it can be life-changing for some people what we're doing with Utherverse. Okay? All right,
And
brother,
Doug,
what were you going to say?
That's a friends and family round.
Yeah, I
right?
said we. Good. Yeah, good.
It's a friends and family round, guys. So don't be
Yeah.
posting and bringing just a bunch of randoms, but actually bring the people you love, friends and
Yeah.
family.
Yeah, somebody more than you just stood in line at Walmart with.
Yeah,
Yeah. Unless you had a really good talk. Now they may be a friend. I don't
unless
know.
they're super cool.
Right.
Yeah.
But anyways, the whole goal, guys, is to bless people. And this is an opportunity to do that. Okay.
Yeah, and it hasn't been Perry, it hasn't been scheduled yet. It's going to be sometime this week though. Maybe on a Wednesday night call, maybe we have a special call. We're not
Might
sure.
be, I think it might either be Tuesday or Wednesday. So have those 2 days kind of in your mind.
Okay.
Okay.
Watch in Discord. Candace will let us all know.
Yeah. And Brian Schuster, he super cool guy. Really, 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 really like Brian.
Yeah.
And so you guys will like him too. He's just really, he's he's a genius, a real bona fide certified genius, right? And it's fun to hang out with people that think at that level, right? It's just it's a great experience, and it's something that you guys can enjoy because you get the opportunity to meet somebody like that. So it's very cool. So
Yeah.
all right,
Awesome.
Brendan, you were gonna say something, buddy?
Yeah.
Yeah, we'll catch up. We'll catch up. It's okay.
Okay. All right. All right.
Thanks,
Thanks everybody. Have a great weekend. We'll see you next week. Take care all.
Bye, guys.
Bye,
Bye-bye.
everyone. Thank you.